to your Monday edition of TraderMerlin. It, of course, is Monday. As you guys know, no trading for me today because I'm still on my second day of disciplined reprimand. So no trading, but we did have some great market moves. A little bit of a heads up for this week. We actually had a really great week of guests this week. Today, we're going to have Tillie Allison on the program after I go through our opening markets. Tillie's going to talk about her brand new book. That's right, it's released, it's available for you to read and consume right now, all about the Fed. We'll talk about that here in a little bit, so hopefully you guys have some questions for Tillie, etc. Yeah, for newbies, we have a lot of people who might be joining us brand new to the show. Go ahead and click that subscribe button. Of course, as we progress, if you like the show, go ahead and give me a thumbs up. And if you don't like the show, that's even better. Well, not better, I hope you like the show. But go to TraderMerlin.com and let me know what it is that you didn't like about the show, and I will hopefully make some of those changes along the way, as some of you did over the weekend for some things. All right, let's get things started with our market update and kick things off with what, for all intents and purposes, was a pretty darn good day. Lots of green on the screen, as you guys can see here. We'll start with gold. Gold was the bottom of the barrel, but look at the chart. Would you really call that a bad day for gold? No, 1750 is where it closed. It was down 0.05%, so all in all, a decent day. Now, of course, the shock for me was what these markets did. When we looked at the markets rallying up like they did, it was kind of shocking to me, but we'll get there. All right, here is crude oil. We talked about it yesterday or on Friday's session, really being critical as closing over $35 a barrel. It hovered there today. Didn't really do much as far as range goes. 35.56 is where it closed at today. That was a gain of 0.2%. Yes, guys. No ads. Since I wanted to do a test, just so you guys know, I did a test for 1 month to see how much money I would make from ad revenue. It ended up being like $300, and honestly, I just didn't want to torture you guys with that. Obviously, at some point, I hope to monetize this channel because, I think you guys all appreciate there's a lot of work involved every single day to make the show, from visuals, graphics, to content, and everything. So at some point, I need to reward myself for that. But I decided to do a test for 1 month. That test is now over, so you guys won't have ads for a while. I'll probably leave the ads off. And again, thank you guys for the contributions that donated on Friday. That was awesome. So back to our list here. That was crude oil up 0.2. NASDAQ was up 0.34%. Boy, I tell you, it just keeps shrugging off any sort of negativity. I mean, we have riots raging in 150 cities across the U.S., and some of that is pretty damn ugly, man. I mean, they're killing people on the streets. Obviously, I'm not going to go into the politics or any of the race issues going on there. Obviously, it's horrible and love to see some resolution. But generally, that type of thing ripples fear into the financial markets, and we just shrugged off any sort of bad news out there, and we're moving higher today. NASDAQ was up 0.34%. Indigo Clover, thank you so much for our contribution. You guys found that contribution button. I'm starting to love it. I get donations every now and again. That was awesome. Thank you so much. And of course, if you have any questions, if you're going to pay, you may as well ask the good stuff in there. And I'll try to prioritize those questions. But thank you, Indigo Clover, for the donation. I do appreciate that very much. S&P 500, again, the thorn in my side that just will not go down. 0.38% move to the upside to 3,053 on the session for the ES. Russell 2000 was, again, the leader. It's been, when it's the leader, it has huge updates compared to the rest of the markets. It was over double the S&P returns today at 8.87%. 1,404 is where we closed at. And again, our target for that one is right around that 1,500 mark here, just because of whole number psychology. So that's what we've got for Russell 2000. And then finally, the best performer on the day, which, it's been a good 5-day run for Bitcoin. It was down around 87.50. Now it's at 97.65. A pretty good move in 1 week. It was up 3.12% on the session, making it your best performer. And my guess is you'll be challenging 10,000 on Bitcoin very, very soon. Okay. So, our guest for today, what do we say about this lady? She's been on Power Trading Radio many, many times over the years. Actually, at the very beginning was going to be one of the co-hosts, but she was just living in different parts of the country, and it didn't make it easy for us to have her on as the co-host all the time. But she was on pretty regular in Power Trading Radio, has a very interesting background of going to seminars and all kinds of workshops to try to learn trading, and just one of those extremely studious people who just has a thirst for knowledge and understanding. And not only is she a great teacher at Online Trading Academy, but as of, I guess, a week ago, she is now an author, having published a book out there. We've got Tillie Allison joining us today. Tillie, how you doing? Don't forget to unmute your microphone. It's always a microphone. Is always a little blip. You got to unmute your microphone, Tillie. The little mic white circle? No, you're muted still. You got to unmute that bad boy. The little white circle, just click it, and you'll be ready to go. No, I've got no audio on you. Still can't hear you, Tillie. We're going to do a show about mimes today. Oh, to the bottom of your screen, there should be a little microphone button. You just got to mute that one. It's going. Let's see. For some reason, we're not hearing Tillie. Let me do this real quick. I'll do this as a test. I'm going to call you right back, Tillie. So I'm going to annoy the listeners really quickly. I'll just do a real quick call. And that one, I'll call her again. And you guys can hear this ringing in the background. I know it's terrible. I'll even dance to it to make it look better. I don't know if that helped. All right. Can you talk now, Tillie?
I can speak now.
There we go. All right, let me pull that full screen for you guys. The beauty of doing things live on the show. Here is the lovely and talented Tillie Allison. There you are, Tillie. So, how you doing? I think we have a little. I think actually it's a Skype issue because there was like a little delay there. But I can see you now, but you're not. Your voice isn't moving. How you doing today, Tillie?
I'm good. Yeah. So I don't know.
You're good. We've got audio. So the good news is I talked to my support team, my crack support team, which means I can click this button and I don't have to use your video. We can just use this nice picture I've all prepared. And that's what we'll do. We'll do that one instead. We got to love contingency plans and doing things live on the air. So Tillie, tell me a little bit about how things been going with you. I haven't talked to you in a couple months now. Tillie? Oh, really? Frozen now? Oh. Tillie, what is going on here? I was all excited to have this amazing show with Tillie talking about her book, and for some reason we are having major technical difficulties today. I'll try it one more time, Tillie. I'm just going to do a regular call here so we don't do video. Maybe that's part of the issue of lag here. Sorry, guys. Oh, my gosh, you guys are so awesome. Mosin, thank you very much. Roxanne Stook, thank you very much. Tillie, we're just going to do audio today. How's that?
Got it.
Okay. Okay. Apologize for that, guys. Things happen out there. Yes, thank you guys so much. I'm getting donations to the show today, Tillie, so I'm pretty excited. It's always a pleasure to be rewarded for some of your efforts. Tell me a little bit about where you've been, what's been going on in your world. I haven't talked to you in quite some time.
Okay, I just want to confirm that you can hear me.
I hear you loud and clear. Yep.
Okay, awesome. Now, we had just gotten through all this COVID epidemic, and I was so kind of relieved that we got some opportunities for everyone in the country and all around the world to be able to enjoy company again and visit our friends and family. So it's very, very heartbreaking that just as we start to see some back to enjoying people's company, now all of a sudden we have all this violence in the different cities. And so for me, it's very heavy on my heart to see devastation. I agree. It's frustrating, and I think for me, honestly, the most challenging part right now is we want to say things, we want to do things to help, but what's I found so interesting is now if I say I am supporting one cause, then all of a sudden someone say I'm racist because I'm not supporting this cause, and if I support that cause, and the person on the other side said, so I'm really doing my best trying to stay out of it. I hope that we can come to some peaceful agreement with all this that's going on. It is pretty heartbreaking, especially to watch the news and the media last night, watching just destruction at random, and whether this is conspiracy or not, who knows, but it's pretty disrupting, pretty sad. Well, what all these issues have in common, Merlin, and I think that we can all see this, is that there are so many different ways to see different things. And whether it's the COVID-19 virus or some police brutality, or any other socio event that also does impact the economy, socioeconomic events that we all are very passionate about. And that's one reason that I wrote the book, is because we all invest or trade some way, shape, or form. Most people do invest somehow in the market, and we all have different belief systems about the market. We all have different opinions about it. And whenever we use those beliefs and those opinions to try to make decisions, we're not really aligning our actions with what it is itself and what the market is, specifically like the S&P 500 index. Yeah, and part of that, you talk about some of the good and bad out there, and I think if we talk about the good and the bad, it's a nice segue into your book. Because we could talk about this issue that's going on right now the whole show. To see things, and there's what they say, clarity somewhere in the middle, maybe. Yeah, it usually is. I mean, obviously, again, we could talk all day about this issue going on in America, but let's talk about something that's been going on in America since I believe December 23rd, 1913, which many would agree is maybe just as destructive as some of the things we talked about today.
Your new book called The Fed Effect, The Centralized Federal Banking System. It's your first book out there, so congratulations. I'm extremely excited because I know you've been working on this one for years. Tell me why you wrote this book.
Well, first of all, Merlin, I've been working on many books for many years. And a lot of the books that I have actually written but not published are more technical about investing and trading. But what I've learned over the years from all of my students and other people that I know, friends and family, is that as we like a company, whether it's Caterpillar or Starbucks or Amazon or Google, that we tend to have confidence that a company might do well, but in reality, how much we like the product and all that may not necessarily impact the price per share. And so, our expectations are one thing, but what the stock does is another. And so stocks themselves, about 20% of their movement is independent and very difficult for anyone to determine what is causing that movement. But on the other hand, where we find more consistency, and about 80% of the time we can accurately determine its behavior, is a stock index like the S&P 500. Mm-hmm. So, take aside all the opinions that we have about a company and just look at the index itself and realize that most investors, whenever you really think about it, Merlin, would you be more satisfied over the next 10, 20, 30, 50 years with a consistent rate of return? Or would you be more, would you rather have volatility? Do you want the uncertainty? Do you want some good quarters doing good and some good quarters not so doing good? What would you prefer?
Tillie, you forget who you're asking here. As an investor, as someone who would say, I'm going to look at my 401k and my IRAs, I want consistency. If you slap on 8% rate of return per year, I'd be happy as a pig in poop, However,
exactly.
As a trader, I want those 40% down years, those 60% up. Give me volatility, hallelujah. But those are two different mindsets.
Yep. And that's what we encourage is, in this investment industry, there are different account types, and we can have our fund money, which is obviously a very small amount relative to our big bucket, if you will. But in that big bucket, we're looking for stability. And just what I've seen so many times in so many conversations with friends and family, a good friend of mine called me today and was all excited because his neighbor had invested in this crude oil product and had earned like 70% in the last 2 weeks,
Yeah.
but didn't have any management plan at all.
Yeah.
And so I know in a few weeks from now, he's either going to be super happy again because he's doubled or tripled his money, or he's going to be really depressed because he's lost it all again.
Right.
And so, just riding that roller coaster. So what this book is about is more of a look at the index, the S&P 500, and how the system, the Federal Reserve banking system, the banks are aligned with the Federal Reserve's actions to stimulate the stock market, the S&P 500 index, which does then effectively affect all the individual companies. And then, though, to look at the fact that the goal of the Federal Reserve, of course, is to stimulate employment, mm-hmm. which also stimulates the market because of all the contributions coming into the stock market. And then, of course, banks themselves are investing and actively trading. And so what the book reveals is some of the information that's not so popular on the CNBC or not so popular on, Fast Money is really the underlying relationship between the Fed and how involved they are with intra-bank trading and trying to take more of a look at the trading that multi-trillion-dollar markets are and how their attempts to be self-regulated, mm-hmm. and how the Fed is aware of this, realizing that, if you and I have a credit card with no limit, what's eventually going to happen? And so this look at the efforts of too big to fail and doing what the Fed is trying to do to manage that reality and the overall impact on the stock market.
That's a lot there. I mean, you got a lot going on in that discussion piece. Let me ask you real quick. For most people out there, there's this love-hate relationship. Some people think that the Fed is extremely necessary. Others will say that they're the Antichrist and they're the destruction of capitalism in countries around the world, that all fiats ultimately die. So I think maybe from your comments at the very top of the program, I have a feeling you lie somewhere in between. So what's your take on the Fed? Good, bad, get rid of them? What do you think?
My take is it is what it is, and that if we are invested in the S&P 500, being aware of what they're doing to stimulate the market as long as they can, and actively investing and protecting those gains so that when inevitably, as you say, there's so much concern that the inevitable bust or the controversy of eventually everything's going to all blow up, that the underlying reality of what is the true value of money and is there any real value in the share of a stock or a stock index is not the point. What's the point? The bottom line, that if one actively invests in the market and does do regular reallocation and protects those gains and does have a money market or some way to protect those gains, that if the inevitable does happen, they will have benefited from the system.
Right. And I think that the challenge here is, we know that the Fed is just going to continue to push markets up. I mean, if you look at their mandate, obviously full employment's one of them, and market stability.
Yes.
They'll step in when things start to drop, as we saw in March. They're super aggressive cutting rates, getting back down to zero. We spent years getting back up to where we were, and all of a sudden we're back to zero in no time. They don't do too much to prevent the market from having a major ballistic run. If our markets are up 1,000%, they wouldn't really do anything unless inflation was an issue. And I see you want to say something there.
Yes, and they won't be able to prevent the inevitable. So, for example, whenever we had this COVID crisis, and the impact on the market initially was tremendous volatility, and the market began to drop 20, 30% immediately in the shortest time ever from February to March, but has never dropped that fast before. And the Fed then stepping in and doing the exact opposite of what they said they were going to do 4 months before, and begin to again stimulate the market. So yes, what they have is a system to stimulate. But when the inevitable does happen, and everyone does realize that the amount of debt that's been incurred, which I believe right now is close to $18 trillion of corporate debt because of the low interest rate environment, that when that problem, COVID-19, is going to be a small little, grain of sand on this big ocean, if you will, whenever this debt crisis really does impact the market.
So you think that's the next big shoe to drop is this debt bubble? Because, I mean, you saw with their most recent statement by the Fed that they're going to have all these lending programs to help out corporate debt, which many of our guests, including Bill Addis, who's the bond expert on the show, he was saying corporate debt to me is a steaming pile of doo-doo right now and could just really crash things. Fed steps in to bail that out. And, of course, we're seeing them take on more debt. $7 trillion on their balance sheet right now just for the Fed. You think the debt market's the big piece that's going to drop next?
Well, historically, the debt market in some sector has been the culprit for every financial crisis we've ever had, mismanagement of debt. Never before in history have we had the type of debt that is so now spread across multiple sectors. So what we have now that is very different than ever in history is that typically in history there's been one sector that has mismanaged debt, and that has affected the whole market and the economy. In this situation, we have such a vast, broad, so many different companies have borrowed so much money that it's likely not going to be just one sector, that they may very well be multiple sectors that inevitably won't be able to manage the debt when interest rates do rise.
I'm hearing that from a lot of people too, that, it's not just one company, it's a variety of different ones. And, who knows what types of plans will be in place when that finally does happen, and what bailout plans are in place. But I think if you're right, if you do look at all those numbers, these balance sheets of debt are getting bigger and bigger and bigger. And right now, I guess things are still kind of rosy. We can still service that debt. But at some point, some of these companies will be unable to service that debt. And I think it's important for people to know, the order at which debt gets paid. For example, for those of you who are shareholders and you own shares of stock, if you're the last one to get paid, obviously bondholders are going to get paid first. So, if the debt bubble does come crashing down, that means that some companies could go under and those shares will end up worthless, which is crazy to think it could happen so quickly. But if the debt burden is so massive and they can't make that debt payment or debt repayment, then all of a sudden that whole house of cards can come down. And I agree with you. I think that's something that we look at right now and say it is extremely a challenging one to see when it's going to finally pop, but it's inevitable. It's just getting bigger and bigger.
So Marlon, what I think really is hard for me to see every day is that most money management in financial markets, most models do not do regular reallocation based off of market volatility. So if investors can just be more familiar with, if the market's up 10, 20, 30%, to protect some of those gains along the way, or have other consistent income like corporate bonds or even treasuries, that whenever this inevitable bubble does burst, they won't get whacked with a 40 or 60% drop and it take another decade to earn it back.
Yeah. All right. So obviously the Fed is, I would say, playing the aggressor role here. What's your thought? I know that you studied retirement planning and all the longer term perspectives. From somebody who's a longer term investor, I think you'd have to praise the Fed for bailing out your accounts and helping these markets stay stable. But you're a trader at heart. Do you have any, is there any part of you that looks at the Fed and goes, you guys suck. You're not letting free markets function. You're overly manipulating markets.
Well, I see that there's a lot more in our society that is manipulated in addition to the stock market.
Everything, right?
Yeah. So the fact that we work very hard for something called the dollar, and what is the value of the dollar other than what the government evaluates it as relative to other global currencies and the purchasing power of it, and how many hours one should work for that dollar. And so I have many other very controversial views on society and money. Mm-hmm. And so what I am very thankful for is that this system works. So far the system works, and we have the opportunity to participate in the system. And I'm very thankful that we do have this system. And if the system should ever change, the most important thing I believe is to recognize that and to adapt with it. So if the Fed is ever structurally changed to where there's other groups of individuals rather than these very, very few that have some impact on the market and some other way to make it more, I guess, a more supply and demand equation rather mm-hmm. than just stimulus and expectations and low interest rate and borrowing money kind of frenzy. Yep. Then that does change, then we have to recognize that.
I haven't gone through the book yet. I'm still waiting. I haven't done it yet because I usually I like hardback stuff. But I've got it up here if you guys want. You can go to Amazon, just type in The Fed Effect, and you'll see this book out here by Tillie Allison-Harris. If you get Kindle Unlimited, it's free. I'm hoping you're making some money on this book.
Well, I don't know yet because my goal is to be able to offer it to students, and so I'm looking at what I can do to get it at cost, mm-hmm. and which obviously for me is none. But how that works with Kindle to be able to offer it to students, because one of the reasons I mentioned, Merlin, I wrote the book is oftentimes, and you know this firsthand, and a lot of our listeners do, I'm sure we have some other instructors, coaches, and mentors that, or even someone who's tried to help out a friend before, making investment decisions and not really understanding the underlying system and the way that the market is manipulated, if you will, managed, directed by the Federal Reserve banking system and those banks themselves, that money flow moves the market. And if someone can be more familiar with that, I believe it helps them kind of set aside their opinions and maybe use their opinions more for the fund money account, and that's kind of more systemic approach to investing.
It's funny, I've got one of my regular hecklers on the program today. Brandon just joined in the chat. Brandon, good to have you with us. He says Merlin is waiting for the Hooked on Phonics version. No, Brandon, I'm waiting for the audiobook. Not Hooked on Phonics. So are you going to do an audiobook for us? Come on. I can see you in your nice sultry voice reading the book to everybody.
There are professionals that do record those.
But they don't have this southern draw that you do. You got to have the draw.
Awesome. I'll consider it. Actually enjoy, it's very much passion of mine to talk about this. And I'm with you 100% on having the fund money account and the trading account. And that's more of a sport, if you will. But longer term investing, the system is designed so that the market can earn 10, 20, 30, 40, or even 300% like it's done the last decade. Yeah. And it is because of the system is stimulating the economy and stimulating the stock market, and really better understanding that the S&P 500 is a leading indicator of the market. And many people don't realize that. They're waiting for some, earnings of a company, or some reason that the market is going to go up, when in fact it's already been going up. We had that bottom out in March and in that reversal, and we're all-time highs again. Yeah, crazy how it works. Guys, just so you know, feel free, if you have questions for Tillie, go ahead and type those into the chat there. I'll try to get those through as we progress. We don't have too much longer here with Tillie, but since you went down that path, walk us through a little bit about what you think to
or your perspective on the markets. I mean, obviously there's one camp that says, hey, we're going to 4,000 on the S&P here by the end of the year because we got all this money coming in. There's another side of the equation that says, hey, you know what? This is all a bunch of crap and it's all manipulated to the upside. It's fake. It's going to come crashing down. Again, I'm pretty sure you're somewhere in the middle there, but what are your thoughts on our markets at this point and what should we be looking for?
I think unless we have another pandemic or some serious problem, and I don't know what it is, of course, if I did, then we'd all be gazillionaires. So we have to realize that any given day we could get another crisis. And unless that crisis, though, is related to the underlying problem, which is how are these companies going to be able to manage multi-trillion dollars of debt when interest rates rise? And I don't have an algorithm. Mm-hmm. So, and it's the Fed. So when interest rates start to rise up 2, 3, 5, 10%, or I don't know if they ever go up again like they did in the 1980s, how is companies going to be able to manage that? So that's the underlying root problem of this whole system, because historically it's been a debt crisis that has brought us down before. Typically with the stabilize and all the efforts made by the Federal Reserve and the government to stimulate employment, to try to get people back to work, to be able to invest, to be able to spend money. All that is, is part of the recipe. It's all baked in so that the market can go higher. So will we retest these highs again very soon? Obviously, likely yes. Will they go higher? We don't know. So when the S&P gets up to 3,400 again, if it's not able to go higher, obviously it could very well cycle down again. And unless we do have another serious culprit, like a debt crisis, it will likely go higher. So unless we have a crisis that, think about it. Why would the market fall 20, 30, 40%? It's to pay off some sort of problem. The only reason that banks would sell that type of position size and liquidate that kind of share size to drop the market 20 or 40 or 50% is because they need that money to pay for the unforeseen problem, whatever it is. Mm-hmm. So depending on the magnitude of the problem is going to determine how very volatile that market will be at that time.
A couple good questions coming in here. One of them, guys, from this really annoying viewer, Brandon Wendell. I'm just kidding. Brandon, that's a great question. He says, what do you think would be the catalyst for the bond bubble to burst? And obviously this is just speculation and opinion because I think we all have different thoughts on what that might be. But at some point, I think as investors, as traders, we got to have our eyes on that quote-unquote canary in the coal mine. And what might that be from your perspective?
Which bond market is Brandon referring to?
He lumped them all together, I guess.
Yeah, that's a big, lots of different markets there in the bond market. We talking about Treasury market manipulation. We talking about that's underfunded by governments that apparently are culprits for creating viruses that cause pandemics.
Are you a conspiracy theorist, Tillie?
Another one is the corporate debt that is, borrowing money on a very low interest rate. That's the debt bubble that I see as the most obvious.
Yeah, me too.
But there's so many different bond markets, and we have debt in all bond markets. And if we actually look at the way that the value of the dollar and the no assets backing any of that's the true, I think, underlying issue.
Interesting. So actually, I thought that Brandon would be talking about corporate, which is what I would think too. And I think you're right. I think there's going to be a point where all of a sudden they're going to be having to raise capital just to pay off their debt, and that will be part of the catalyst. If things drop too quickly, if we see a nice equity market, a sustained down equity market, I think that puts further stress on these corporations and that corporate debt market. But Brandon's talking about treasuries, and to me, the only real way that you would see an implosion there in the treasury side of things is if there was a downgrade of the rating of the U.S. corporate debt. And that would happen if they didn't make payments. And, of course, we know they can print to infinity. So, to me, it seems like the government side of it probably won't have the implosion.
And my concern is the other countries that are buying that debt, if they do not choose to buy that debt. I don't know what kind of agreements our governments have with these other countries that they've made to sustain this expansion. And with all the investments that are coming in from international banks and organizations of people that I don't know the underlying agreement and why they obviously continue to invest heavily in our markets, yet there are so many other controversial issues with trade.
Mm-hmm. Interesting. Brandon, it's a good point. He says, I'm more worried about the so-called risk-free return in U.S. Treasuries, the government and inflation that their printing money should bring. Yeah, it's true. And it's interesting, Tillie, this is, we talk about the Fed. Obviously, the Treasury is the money side, but they have been digitally creating money out of thin air. And everything that you were taught at university, I know you went to Rice, and everything that Brendan was taught, everything that I was taught says, when you increase the money supply so much, you get inflation. And, I'm a scholastics guy, so I'm remembering my schooling, hearing my professor say, an increase in money supply leads to inflation. That's what we had in the 80s, blah, 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 blah. We have been blowing up money supply for the past 20 years, and I haven't seen squat with regards to inflation. So it makes me question my textbooks with regards to the inflation side of things. And the other point with Brandon's comment is, I think that if you have the risk-free, which, that's what we're taught as well, right? Let's go into risk-free for our steady income bucket. They could start going negative on there and tweak that whole equation. Yes, it's risk-free, but you're going to have to pay to take that money off their hands.
Yeah, it looks like, and I know that Brandon is very experienced in the bond market. I think he has tremendous background in different bonds. Mm-hmm. So he knows firsthand the fragility, if you will, that we're all referring to. And it looks as if the reports for inflation, their metrics are being kind of, I think, not factoring in a lot of the factors that we personally feel at home as part of inflation. Mm-hmm. You see, things are getting more expensive, obviously. Never before in history have people been willing to pay $100,000 for a car. I mean, if you really look at the mechanics and the metrics of calculations and the way that they're calculating inflation, a loaf of bread, have any time ever before in history anyone paid $10 for a loaf of bread? Yet we don't have inflation. So I do believe that the algorithms that are being used to calculate these metrics are all designed to work together, and they're not factoring in the things that are really truly affecting our quality of life and our ability to provide for our families. So mm-hmm. I think those metrics are a bit skewed.
100%. I think not only they skewed, but it's you talk about thieves. It's thievery right out from underneath their noses. And I've talked about this in the past. I'll give you guys an example. I like beer. No mistake. I'm German, so I like my beers. If you say, give me a bottle of beer, it's 12 ounces, period. And I'm sure that is part of a CPI and PPI measurement of inflation is a 6-pack of beer. So what's interesting is you look now, some beers have gone from 12 ounces to 11.3 ounces. You literally stole beer from me, but the 6-pack has remained the same price. So it's interesting because according to inflationary data, no big deal. There's no inflation, but you just took a percentage of the product that I had paid for initially. Same thing with orange juice. Used to be in 64-ounce containers. Now it's 58. You're like, well, wait a minute. Where the hell is all this extra?
Potato chips is a lot smaller.
Yeah, right.
Getting half a bag of potato chips.
Oliver, thank you so much. We must be engaging today, Tillie. Our viewers are sending in contributions of support for TraderMerlin today because of you, actually.
Awesome.
Not only that, but I think that Oliver went out and bought your book. For those that don't know, we've been talking about Tillie Allison's book today. I'll bring that one up. There's the screen. If you go to Amazon, you can check it out. It's called The Fed Effect, the Centralized Federal Banking System. I've had the privilege of working with Tillie for many, many years, and I know that the passion and dedication she gives, not only to find great information and compelling thoughts, topics, and arguments, but also to share information with the students that she's had over the years. Tillie is out of Kansas City. On that thread, let's talk a little bit about your upcoming teaching. What do you got on your plate? Are you doing any upcoming classes going on here? I know that things might be a little bit different with the whole OTA FTC thing right now, but are you still teaching?
Yes, I do teach, and we are able to have some classes. And what I love most about Kansas City is that the 3,800 students that have stepped forward and said how very happy they are to be a student has made a big difference, and I'm very thankful for that. And so do some online classes as well, and so looking forward to doing that. But we do have classes here locally in Kansas City, And what I've been encouraging is students to do more of like a 3-hour live lab, which is kind of what we have online. And so that's been something new that we've been offering.
Still doing the teaching gig. Love to see it. What else can I ask you? Anything else new on the horizon? You said you're working on a bunch of different books. Now maybe curiosity killed the cat here, but you got the Fed one out. What's your next one going to be about?
Well, now, Merlin, you know that I can't reveal those kinds of secrets. But I will be working on some promotional things to guide readers to those so that they'll be ready for that. You know, obviously I'm starting with a real macro approach to the financial markets and then get down into more of the micro, which is the more high frequency trading. So that's where we're going, but we got to start with the big picture and the systemic impact of the Fed first.
Well, I'm glad that I'm glad you finally got that book out there. I know it's been a long time coming. This is your first one, right?
So now all of you out there readers, I know some of you can probably speed read through this book literally in less than an hour, because I know some of you out there are real speed readers. It's a real easy read. It gets into a little bit of raw data coming from the Fed and limit lock market moves and stuff like that, and size limits and all that. You know, that part's a little bit dry, so just get through it, because you need to understand how heavily involved the Fed is with trading. They very well understand exactly what's going on. Mm-hmm. And they know how fragile the system is. And isn't it crazy that they had all these stress tests, and the fact that banks had proven that they had all this, reserve capital available, and yet all of a sudden when this pandemic hit, what did the market still do? Mm-hmm. So what does it have to have multi-billions of dollars of capital reserve if one negative news event, causes the market to still plummet faster than it's ever fallen before in history? Mm-hmm. So that's a not very effective, stress tests obviously are not going to stop the market from falling.
Sure.
They keep businesses, of course, like the banks doing business. It can protect banks, and banks can still do business, but what about the consumer? Mm-hmm. So there's a real controversy there, but my goal is to then provide more guidance as to active investing strategies, and then eventually segue into the high-frequency intraday trading.
Nice. I think I did answer this one, but you are a CFP, correct?
I have my CFP education completed. I've taken my test, but I do not practice as a CFP because of the controversial, the fiduciary responsibility that a CFP takes on. Mm-hmm. Yet the CFP doesn't have the opportunity to really manage money. So I'm more interested in managing accounts, my portfolio. I do active management of that, and I do consulting in the industry for friends and family as to help and guide people be more active investors. But I do not practice as a CFP because I don't believe the fiduciary responsibility is a well-designed responsibility.
Cool. And it was Rice, correct?
Yeah.
There you go. The viewers are asking out there. Brandon says, how's the baby? The baby's good. I made her take the baby upstairs, though. I was like, no, you can't have the kid on the show yet. You can't start him that young, Tillie.
He's upstairs, but hey, whenever he takes his first trade, I guarantee he'll be on the show.
Sounds good. Right? I think we need to have like the children of traders, because Sam Evans has got a kid, and he's teaching them to trade. I know a few other of the instructors and guys having the show have kids that are like, maybe we should have like the children of traders show. It's a dummy content down a little bit, but all the responsibility of money.
So, and all you readers out there, I mentioned easy read, but be gentle on the understanding. It's my first time I've ever published, and the great thing about Kindle is I can go in and do a few edits. I found 2 typos today when I was uploading something about the author, and I did pay a editor, but then I had to, of course, add a few things, and then, of course, I misspell a few words, so you guys be gentle.
That's it. I'm going to read through it and just attack it. I'm going to leave the scathing review, too. I noticed there's no reviews yet, so I'll have to go read through that one and leave you some reviews out there. Tillie, anything else you want to share with our viewers, or you get other than your horrible shirt you're wearing today, that terrible, terrible team? Oh, gosh.
I would love to have a show, Merlin, where we could see all of our viewers. So I don't know if that's on, if you have it on your website where they can all, we can all see each other as well, because
it's interesting.
Yeah, that'd be more fun. And what I really loved about being at home during this terrible time is that I really missed being with you and Brandon and, the Online Trading Academy family and all of our listeners. And I know that many of the listeners on TraderMerlin show may not be from Online Trading Academy, and that's awesome. we're just such a global community, and I've missed you all very much.
Yeah, well, I think that we'll all be back as a family here very, very soon. I can feel it in my bones as the tides are shifting with the FTC. So hopefully we will be back, and who knows, maybe we even do a conference again this year. I'm sure it'll be a lot smaller, but it should be a lot of fun.
Yeah, but what would be fun, Merlin, is on your show if some of our listeners and viewers have trades or things that they're like really thinking about doing, to just like put it out there, and like, hey, I'm really thinking about doing this, and. I
think Oliver says, I was thinking the exact same thing. I was thinking, I could probably get a Zoom room, set it up on a fourth monitor over here, have you guys all log in there. Maybe down the road we'll work on that. That's an interesting one. I'll take some of the donations that have come in, and maybe we'll do some research there. Anyway, Tillie, thank you so much for taking the time to come on the program today. Sorry for the technical issues at the beginning, but we got you on, got an opportunity to talk to our viewers and share your book. Congratulations out there, and I look forward to having you back on again soon.
Thanks, Merlin.
All right, take care, Tillie.
Bye.
All right, guys, that was Tillie Allison. Again, she's got a book called The Fed Effect. I'll bring it back up here real quick for everybody to see. I would encourage you to check that one out. I think if you get Kindle Unlimited, you can read it for free. I will be paying for that one. Got to support my good friends out there. So hopefully you guys enjoy that book. Let me know what you think. We'll try to get her on as much as possible on the future. I know a lot of people here love Tillie when she comes on. She's just a straight shooter and just a fun guest to have on the program. So hopefully we'll get her back on more as I'm going to try to build out our instructor or trader roster here for the show going forward a bit more. All right, so that was Tillie. Again, thank you guys so much. Yeah, I see. I love when I mention sports. Everyone just like goes crazy for sports. We should have a sports day. Here's a funny thing. Years ago, and Brendan, you might remember this one, there are some sports teams that are publicly traded, and especially like in Europe, like Juventus is on the Borsa Italiana, and it's a publicly traded stock, and it's like you would see them lose a game, a very questionable game, like they probably shouldn't have lost. It's like someone threw the match, and then the share price would dump the next day. And I'm thinking, this is the most open thing to insider trading I have ever seen in my life. And then there was also, they got busted because they were paying off referees and all sorts of things. Yeah, sports. No. All right, cool. Well, another quick shout out to everybody who contributed. Oliver, thank you so much as well. We had a bunch of contributions today from Roxanne and Mosin with a very generous donation. Thank you so much. I do appreciate that. Indigo, you kicked it all off, so thank you, my friends. I do appreciate the donation. I know that you guys know that this is not an easy thing to do every single day, so it's nice to get some appreciation out there from you guys, other than just you joining me every day. So I really do appreciate that. Let me show you what's cooking for tomorrow. Let me bring up, I got a couple things going on here. Let's bring up the slides so I can show you. There's the Fed Effect we did with Tillie. Now, here's what's cooking for tomorrow. Interestingly enough, we talked about Zoom. Zoom reports earnings tomorrow, and I think this is what's going to happen with Zoom. I think Zoom's going to have an incredible earnings announcement. It probably has run up a lot. I have not actually looked at the charts, so let me just look at that one for you guys. We'll look at ZM. This might be ripe for a short as we start to roll out of coronavirus and COVID and quarantine, right? A lot of people have used this, and I think that's part of the reason it spiked up so much. I think you notice now you have a huge move up today. It was up 15%. I believe they're reporting earnings, and I think, let me just check that. I know they're reporting earnings. I believe it's BMO or after market close. So they should be reporting earnings tomorrow after market close. That chart right now tells me that somebody knows something. Look at the volume spike. We talked about this the other day with another company reporting earnings. Its average is 13 million shares a day, and of course that only spiked as of February as coronavirus came into play. Before that, this thing was trading at about 2 million shares a day. So all of a sudden you have a huge spike in volume, and now it's at 24 million shares traded today. Let's take a peek at the intraday chart here just to see if there was any real big, huge volume today. I'm telling you, somebody inside this company has leaked information, and it's clear that they're probably going to have a huge earnings announcement. What this means is when they report earnings tomorrow after close, it might make for a great shorting opportunity after the announcement. I'd be careful because it's probably going to vault up on the earnings announcement, but just crazy the way Zoom's been going over the past few months because of this whole coronavirus thing. That's the most interesting one for tomorrow is the Zoom. Other than that, not a lot in here. I cut all the way down to Dick's Sporting Goods because I think a lot of these places are going to get crushed as well and really have a bad run of things. Earnings calendar for tomorrow is going to show us not a lot. You can see here, nothing really major here. You have Swiss franc GDP, Australia GDP, nothing for the U.S. that's noteworthy. And, the BRC shop price index for the British pound, not that great. So it's not going to be a huge day on the economic front for our markets, but certainly there is some on the earnings with Zoom. We'll check that one out. All right, let me see real quick. I got a couple questions here. Holy crap, the Leafs would be bankrupt. Isn't that crazy to see how... And look at local sports teams that are publicly traded. I don't think that they should be publicly traded. Watching a video from a few weeks ago. This is from Roy. And you mentioned that you were going to have someone on the talk about cannabis stocks. What's that? I haven't had that one yet. I think he's afraid to come on the program. He's kind of camera shy, so I'll pursue him again. He actually just got 2 new jobs. I think might take him to Colorado, but I will try to do my best to get. Thanks, Roy, for that one. I'll make a note right now to get him on the program because I think that he offers some insights into the cannabis industry that are going to be a bit different than a normal analyst because he's not a market analyst. He's someone who's just in the industry, right? So he sees the trends, where things may be headed, and I think that would be a great show, and I'm trying to get that guy on. I'll continue to do it. Who are the female options instructors at OTA that was on PTR? Man, I completely dropped the ball on her name. Oh, she's awesome. She's an ex-military guy, a military person. She's shorter. She's got a little black hair. I can't remember. I'll have to look that one. Sue O'Grady. Thank you, Brendan. Sue O'Grady. Sue O'Grady was on Power Trading Radio. I haven't had her on this show. I'll try to get her on here. That was a wild one. She is great. She's just a straight shooter. It's just a fun gal to have on the program. So I'll see if I can get her on the program as well, Joseph. All right. What else we got? Yeah, Brendan. What's with your book? I think we had a competition in the past about who writes a book. Okay, so Tillie and I had a competition on who was going to finish a book first. Tillie won. So I think right now, since Brandon's here, I think we should throw down the gauntlet, and there should be a challenge between Brandon and myself on who finishes the book first. I think that might be a good challenge there. It's going to inspire me to finish my book, but it's got to be something that if Brandon loses, he just gets really embarrassed. What could be you guys type it in chat. What do you think should be the prize for whoever finishes their book first between Brandon and I? Because Brendan and I both are those type of person that operate under pressure. And if someone's going to, pressure us to finish a book and there's a prize on the line, I'm pretty sure we will actually really push to get it done. Children's books don't count. Yoa, I can't use that book I wrote about you. So come on, what do you guys think? Brandon, you think you could be up for the challenge? Come on. No, I'll save that. I'll save that one for no problem. What do we got, Brandon? Come on, we've got the audience with us now. Brandon, I'll tell you what. I'll work with Brandon. We'll come up with some. Something that we have to do on the program, on the show or something, just to help he and I inspire ourselves to finish this book. We will do almost anything. Yeah, pretty much. But see, Dave, the mullet just takes too long to grow out. I don't know if I could wear the Ziggy Stardust outfit. But see, the Ziggy Stardust I would do for fun. I like doing that stuff. Here's the thing, Joseph. I have the ladies say they like the beard, so it's got to stay there. All right, guys, that's it for today. I can continue on here. I will work with Brandon. If you guys have ideas for what should be our wager between Brandon and I, who finishes our book first, type it in the chat or put it down in the comments below the video. I will do my best to finish mine. I do need that inspiration. I really need to get that push to get me through to finish that book. All right, I went to your economic calendar. I went to your earnings calendar. Tomorrow we are going to have another great guest on the program. We're going to be talking options. We're going to have Lauren Newman on the program. Here's the schedule for this week. I've got Lauren Newman, who spent 35 years on the floor, I think 25 years on the floor of the CBOE, the Chicago Board of Options Exchange. I'm going to have Bob Dunn on the program on Wednesday, and I'm going to have Sam Evans on Friday. Thursday is open. I'm going to try to get John O'Donnell on, so I might have guests all week, which means my question answering for a lot of viewers might be a little more limited than normal, but I think you guys are probably getting tired of hearing me talk all the time, so we will... You're going to do an indicator a day. I was going to do an indicator day where I do just a show just on indicators. But anyway, I'll see what I can get done with an indicators show. I want to do one which just covers everything. I know Brendan as well. Maybe Brendan and I could do a show together where we talk about indicators because, he's the CMT and those guys go through a ton of indicators and he'll probably agree that most of them are just garbage. They're just taking some old data, running through a little formula and spitting out some result, and then someone says, hey, this is useful. And yeah, all it is reading past price. There are some indicators that are actually very beneficial, I think, in keeping you in a trade or maybe giving you some signals that the security is getting stronger or weaker, but none of them should be your go-to that determine that you make the trade. So I'll work with Brandon. I want to do a wager on the book thing just to light my fire and get me motivated to finish it. So do one per day. Chris, that's a lot of work, brother. That's a lot of work. All right, that will do it for today's show, everybody. I think that we approach an hour. We're pretty damn close. I thought this would be a half-hour show, and here all of a sudden it gets later and later. Yeah, RSI definitely on the list. Of course, when we do an indicator show, it's going to be your RSI, Bollinger, MACD, shaken oscillators, stochastics, those types of things, the easy stuff that you want to know how they work and understand them. So when you do see them on your charts, most times you can actually just remove them from your chart and look at price and say, this is what the indicator would tell me. That's how I learned many, many years ago. All right, guys, thank you so much. Brendan, thanks for joining us today as well and participating in our chat. Everybody who contributed today, thank you so much out there. Indigo, Mosen, Roxanne, and at the very end, I saw Oliver come in. Thank you guys so much for your donations to the show today. I really do appreciate it. I will put it to good use, and I'm actually working on setting up another I got the way this office is set up. I've got this at the primary shoot here, but I could also put a whiteboard over here. That's my next thought. Do a whiteboard with a second camera, so when you guys ask specifically, I could do whiteboard drawing education, which I think would be kind of fun. And the other one might be to have a second desk over here, so I could actually get other people in my studio to do a show. So anyway, that's the show for today, everybody. Again, if you have any comments or questions, feel free to go out to TraderMerlin.com. You can send your comments and questions there. Of course, the easiest thing to do is just go right down below the video that you see here and type in your comments or questions. Hit that like button. The thumbs up button certainly helps us out a lot on the show. Until then, happy trading, everybody, and I hope to see you all tomorrow with Lauren Newman for a totally dedicated option show. We'll see you then.